Awesome. Hello, and this is Jennifer Ott, Florida Realtor, and I am having a special Zoom to talk about a very touchy subject, which is divorces. And my guest today is Ryan Speltz. He goes by the Kick Butt Mortgage Guy, but he's also your divorced mortgage guy. And the reason why I brought Ryan on today is to talk a little bit about the process when it comes to divorcing parties and what that means in terms of their assets and how to divide things and what it means or doesn't mean to be equitable, and some of the language that he as a mortgage broker can help you decide on when you are going through this process so that you don't trip up in the divorce decree and not get what you're supposed to, or things don't go the way you think they should. So with that being said, I'm going to turn it over to Ryan so he can talk a little bit about himself and what he does. And then we're going to talk about things you need to know when you're dividing assets in a divorce. So Ryan, please.
Sure. Thanks, Jennifer. I am Ryan Speltz, the Kick Butt Mortgage Guy, and do have an expertise. I'm a certified divorce lending professional. So what that means for you as a client, or even if this is if you're watching as a divorce attorney, what I do is provide my expertise in mortgage, which I've been in now for 8+ years. And I provide my expertise in mortgage to you and your clients in being able to help them navigate what actual language, whether it needs to go in the divorce decree, or just some pitfalls that can come up throughout the process of being divorced. Because oftentimes the loan officer gets put into the process at the end of the process when everything's basically finalized or already finalized, right? So we're getting the divorce decree, and there's some language and some stuff that can go into those divorce decrees and make it very, very difficult for you to either be able to refinance that house and pay out your ex-spouse, or being able to even purchase another property using alimony or spousal support or anything like that. So having us involved earlier in the process allows you to know with a more sense of certainty that you're going to be able to perform and be able to execute your real estate goals at the end of your divorce.
That's really fantastic because I have two clients currently who are kind of in the process. Now, my first question would be, so you mentioned that you guys kind of come in at the end of the process once the decree is issued. Where do you suggest people start with this? At what point do you think that they should contact you?
A lot of times we're going to come in right after mediation. So, a lot of the divorces that happen, that's kind of where, the things start getting figured out about who's splitting up what. And we'll run into situations where people are thinking, and it's naivete, right? Like it's just they don't study mortgage guidelines, right? There's 17,000 mortgage guidelines out there, and no way anybody knows them all, especially a divorce attorney whose job is to help you get the divorce finalized. So putting us into that process at that point allows us to kind of balance things out more fairly and more equitable. The common example that I give is, a lot of times you're looking at 250,000 versus 250,000. 250,000 in an IRA does not equal 250,000 in home equity, but oftentimes in divorce decrees, that's how it's written. Well, 250,000 in home equity, when they go to sell that house, that 250,000, because of the current homestead rules, that's going to be tax free. Where that 250,000 in that IRA, that's going to be taxed when it's taken out. So, now you're looking at a very uneven, I mean, you're talking 20 to 30% difference in, what a lot of divorce professionals will put into a decree thinking it's fair and equitable. And so, it's just things like that you have to pay attention to. And so putting us up into the process as early as possible, right after mediation, is kind of the best place to get us involved.
Okay, well, I understand that. Initially, I think when people sit down with a divorce attorney for the first time, they are kind of listing out what the assets are and who has what and who has, the different properties. Can you just describe some of those pitfalls that you've seen where the divorce attorney has proceeded without your guidance, where you've had to come in and kind of put band-aids on things, or people at the end are very contentious even after things have gone through? So how do you handle that, and what would you do in those circumstances?
Yeah, I mean, it's, like we've talked about, off camera, it's a touchy subject, right? Like it's very difficult to do that. And so, as a professional in my position, my goal is to keep everything as fair and equitable as possible and to help the divorce team keep as many of the assets as possible, because a lot of times you're dealing with taxable events or certain situations that happen where you're having to liquidate assets in divorces. And with that happening, you're losing a lot, right? You can lose a lot of the value. But if you're able to utilize real estate where, there's a statistic out there that 68% of marital asset is in the home on average for married couples. So we're talking about 70% of people's livelihoods, right? People's net worth is in the
Right,
home.
in their
So,
house. Hmm.
that's just being able to jump in there and help people out that way. I've seen a lot of situations where just because of the way it was written, that they're getting, let's say, child support for 3 years or something like that. Well, if that starts right at the end of the divorce, now we're in a situation where we have to wait for 3 months to prove that it's being paid. And now we're only 2 years and 9 months left. And in a mortgage world, we have to prove that income is going to last for at least 3 years when we close on the home.
So in
So
this
now
case,
we've
there'd be a
gotten into this,
shortfall of income there.
right? So now you're not going to be able to use that income in a mortgage situation, where if you'd have us involved, what we can do is work on getting temporary orders placed. So during that 90 to 120 days of the process of being divorced, that spousal support is being paid. So now if it's going to continue for 3 years after the divorce ends, now we've
And
got
that
income we can
counts
use.
towards the total amount of
Yeah.
time.
Yeah. So just getting things started earlier can change the entire picture. And so, with us involved, would be able to kind of navigate, how much income of one variety would be able to be used or needs to be used, because there's certain, it's all about just the intricacies of the mortgage aspect. And getting those things started earlier just makes everything go smoother later on. So that's a lot of the value, is being able to show them that, it's not going to cost anybody any more money, but if you spread that out over 3 years and 3 months instead of 3 years, you may be able to use it in a mortgage situation where you wouldn't have if you've only done it for 3 years. So
Wow. Yeah, that's a lot to take in. So I bet that people will be wanting to contact you. I'm going to make sure that everybody has a way of reaching you and myself for further questions on that particular topic, because we can just take a nosedive right there for the whole conversation, right?
that one we could go into multiple scenarios for sure.
Correct. All right. Well, speaking of multiple things, what do we do in the case when people have multiple assets, not just the family home or the primary residence, and they have, let's say, rental properties together and things like that? How are we going to ensure that each person is getting their fair share? How would you look at that from the mortgage side of things?
A lot of that is, it's going to depend on what those assets are. So, if they're taxable accounts, a lot of that value can be transferred tax-free in a divorce if it's written into the divorce decree. I'm going to raise my hand and say I'm not a tax professional at this point, because this is where it can get sticky. But that's the advantage of having a full divorce team, right? So you'd have a tax professional, you'd have a divorce attorney, you'd have the mortgage person, the real estate agent. Like, having all of us involved gets a little bit of expertise from each little window. And so that's kind of where, the advantage of using all of us would be able to kind of balance those out a little bit easier. So, as the mortgage professional, my job would be to say, to raise the flag and say, hey, that's not fair and equitable, because this 250,000 is tax free. When, the tax professional would know that, but
in this way within the divorce decree, but that 250,000, like you were saying, if it were the same in an IRA or something,
right.
that would not be the equivalent. We're not talking about being fair. what have you seen in terms of where one spouse makes far greater than the other and it sort of tips the scale of their incomes? Does that also affect when somebody makes much more? In the case that I'm dealing with specifically, I can say that she is making more money than he is, and that according to what they're going after in the final divorce decree is that she would be entitled to something along the lines of like 73%, something odd, but a greater percentage than just a straight 50-50 split. What happens in those cases?
Yeah, I mean, it's all going to kind of depend on, what those incomes are, right? Like if it's a huge gap, that they're going to be able to narrow that a little bit. But it's, a lot of this comes down to what's negotiated too. So, sometimes they're going to negotiate more assets versus more income. And then, as far as where, I would step in there is say, maybe it makes more sense to take the income, or maybe it does make more sense to take the asset. But it's really all ends up kind of what gets negotiated in there, and what, it's again, that fair and equitable piece.
Right. So in this case, you'd be more like a consultant to the primary person who's filing, because they're the ones who are kind of making the declarations of this is how we feel it should go, and then the other person is just sort of the respondent in that situation. So at this point, I would say that if we were on a team working together in this case, which I might invite you to talk with my client, is that I'd want her to talk with you and find out what would be the best course of action in this case, because we haven't reached that final degree stage yet. We're still in, there's loads of time still left to negotiate things. And it would probably be in her best advantage to have that conversation with you, just to fine tune those details and the negotiating aspects of thing, where she can give up some things where she might be holding tight right now in order to gain down the road.
Yep. Yeah. And that's, really it comes into what are your long-term real estate goals? We have this conversation in every situation, right? Whether it's a divorce situation or not. But in the divorce situation, do you take, like we said, do you take a little bit less in the assets and allow those assets then to pay you, or take a little bit more in the income and just weather it out. But it really comes down to what your long-term real estate goals are. So, obviously that's kind of what we're focused around is what can we help you accomplish in the real estate aspect. And in that situation that you were saying, like there is no advantage to being whether you're the person that filed or whether you're the person that responds. So that's, in a divorce situation, it's equal in that regard. That being said, negotiations can go both ways. So if she's saying I want more income, she can ask for more income, and if he's saying I don't want to give more income, that kind of thing, that can go both ways there. But yeah, it's really just what are your long-term goals and how can we help you accomplish that. And maybe what you're clinging to, like you said, is not the right thing to cling to, and we should shift direction.
That's great, because I think above all, in a divorce situation, you've got all the emotions and everything tied into what was, and less into what could be and what's ahead. So having a neutral third party between myself and yourself, to kind of shoulder that and kind of ease the road. I think it's imperative that we're having this conversation because it's super timely. I think I just read a statistic that in the US, divorce rates are up to 70%. So where it used to be a 50% statistic, I think it's skyrocketed since the pandemic. I don't know if you've read the same statistics, but
yeah, I know that it's 60
shocking.
I think it's like 64% of first-time marriages end in divorce, which is that, I mean, it's crazy to think about. And like we said earlier, like 68% of the value is in the home of, value of people's assets. And they're just kind of like letting divorce lawyers who don't deal in real estate just take over and run with it. And, they definitely obviously have their place. I don't know about the laws at all in regards to divorce. They know well more than me in that regard, but, it definitely makes sense to bring in some kind of financial professional around the primary asset, right? The primary home.
Right. It makes sense. So what kind of collaboration do you do with the attorney to ensure that the paperwork says what it needs to say on your end, so there's no trip ups? What
Um,
communication do you do all the way? through?
Yeah, a lot of it is just kind of however the attorney works. Obviously I don't get billed by the hour. I'm a free service to as an add-on. Obviously within hopes of getting whether a refinance or helping with a purchase after the fact. Putting my services out there in that regard. But with that, I mean, I could help with communication via the client or the attorney. And just taking a look at those documents and helping them figure out, hey, is this going to be what they need to be able to buy a house? And we can look at whether they want to buy a $200,000, $300,000, $400,000 house. We can put together rough numbers on that and say, yeah, they should need around this much in income to be able to purchase that. Or there's a ton of times I've seen where that refinance language gets put into the divorce decree, where this person must refinance and pay out the other person, and then they don't give them enough income to qualify for that loan, and nothing can happen, right? So that blows up the divorce decree, and then we go back to the divorce attorneys and they rebuild the entire decree, and then it ends up they have to sell the house because the person can't qualify based off of what they've negotiated previously.
And we could have come to this conclusion a lot sooner
Right.
and gotten
Right.
a better
Yeah.
outcome for everybody involved, and
Yep.
not drug this out as it, as they tend to be drug out anyway.
Yeah, and a common language too that gets put in there is buying out. And you and I have discussed this
We
and
have.
kind of why we're even here, right?
Yes.
But buying out the other partner. And again, this is of no fault of the divorce attorney, except that's what language they've used. Well, when that language gets used, that's how the situation has to go. So if the husband is to buy out the wife, he would then need to buy the property from the wife so that she could take the proceeds. Where if it's worded properly in the divorce decree, we're able to do a refinance. And a lot of people saying, they don't realize that you don't have to do a cash out refinance, which is a worse interest rate. It's a worse situation. We don't have to do that. So
that's what I was thinking in my mind when you said that. So I'm glad you made the difference. So
yeah, so in a divorce
explain that one, I'm sorry.
situation, we can actually go up to 95% of the home value, as long as the person who is doing the refinance or the person who's taking over the mortgage does not get one penny from that transaction. So what would have to happen in that situation, if they need to buy out or pay out their ex-spouse, we could go up to that 95%. And as long as all that money that's coming from the proceeds of that loan go to the ex-spouse, we can go up to 95%. So instead of going to only 80% on a cash out refinance. So there's a lot more tappable equity if needed. And that comes down to maybe they, take that extra money to allow them to keep a retirement account or something like that, and again, it's not going to be dollar for dollar because of the taxation of it, but there are different ways to negotiate with more equity versus, let's cap it at 80% and then we got to find a different way to make it even.
Right, which is what I was going to say, is that, most of the time when you're doing a cash out refinance, they can only go up to 80% of LTV. So that's definitely more beneficial. The 95% could definitely be the straw that makes, the difference.
Yeah, especially these days when, people that bought 3 years ago or, they've doubled their equity in their home. And, I would say that 68% maybe even be an outdated stat at this point with the amount of how fast home values rose in Florida, over the course of the last couple of years. So
right, and we can speak specifically to things in Florida and not other states. So let that just be a caveat to the conversation,
sure.
that if somebody's looking at this from outside of Florida, that they'd have to consult with their attorneys and their CPAs to make sure that things line up appropriately. But I feel like there's similarities across the board. So
definitely, yeah. I've been licensed on and off in all 50 states at some point in my mortgage career, and majority of real estate transactions kind of operate the same way. And especially in regards to the mortgage guidelines, it's in every state, it's the same. Obviously, outside of, there's some community property states in there, which things get a little different because then anything acquired during the mortgage, whether it's on one side or not, becomes joint property. States like Texas and Arizona are that way. But there's, that's really the major differences are in the community property states. So, yeah, a lot of times it operates pretty close to the same.
Wow. This has just been an eye opener. You've said a couple of things to me that make me think that yes, I have new information and new ways to support my clients who are going through this really tough situation as it is. So I thank you for all of that. And I wanted to add, if there's anything that you wanted to put in that we didn't yet touch on as far as this conversation that you feel might be relevant for people to know. Um, we talked about what the Florida law might look like, but we're not, neither of us are attorneys, so we can't really say too much in that regard. But I want to know if there's anything else that people should take away from this conversation.
Honestly, it's just ask questions, and especially in a divorce situation, it's very hard to separate the emotion. But that's and even in real estate in general, right? Like it gets so emotional buying a home, and when you're with surrounding that family home, I know that there's so many emotions and so many memories and everything that can go into that. And just being able to kind of separate those a little bit and ask your attorney questions and make sure that the situation you're getting into is fair and equitable. And if they don't have a mortgage professional on their side, that's definitely something like, hey, do you know of any mortgage professionals that I can talk to make sure that what we're doing makes sense for us long term in our real estate goals? And that's the only thing I can really say is just ask a lot of questions.
Right. And I think people will come up with more questions based on what we've talked about. So I'm curious to see what the conversation will be later after we've, put this video out and shared it uh, between our groups and between real estate professionals, attorneys. Um, I would love to continue the conversation on some of these topics to take a little deeper dive into some of the questions that we've covered. But I really want to say thank you because, the way I came across your information and got involved in your group is just like that online social network. And I asked questions. And when you posted that post the other day, divorce, mortgage planning facts, and then you had the sign that said, if you transfer your home to a former spouse in a divorce, in most cases, you will have no taxable gain on the transfer. It just got me thinking that I'm dealing with several situations where this could be applicable and make all the difference in the world for my clients. So,
Yeah, and seeking that knowledge is super important. And the fact that you're willing to do that, I mean, that puts you far and above a lot of agents in this current environment for sure. And I would warrant to any other agents that are watching this, if you don't know about divorce, do not try to market as a divorce real estate agent, because you can get yourself into a lot of hot water very, very quickly. And it's very difficult to ride that line if you don't know the rules and understand enough to be successful. And but if you are searching for more information, then there's a lot of information out there to find, and make sure that you're doing your due diligence if you're trying to operate in that niche.
right. And you yourself went and got certified above and beyond your mortgage qualifications to specialize in this. So, you're coming from a place of deeper knowledge, and that's why I thought this conversation was so important to have, because I wouldn't have known that there was a mortgage professional who had really fine-tuned this, and kind of taken the bugs out to make it easier to understand. And I think that law language is really scary to everybody. So you're looking at a 14 to 20 page document in legalese, and having somebody like yourself and somebody like myself to like break it down on the real estate side and the mortgage side really just gives those clients another level of protection and makes them feel like they are getting all the value that they deserve, and ultimately getting what they should have and what's fair and equitable in a very hard situation.
Definitely.
All right. Well, that's all the time that we have for today. But Ryan, I want to thank you again. And if you're looking for an awesome mortgage guy, you've got the Kick Butt Mortgage Guy and also the Your Divorce Mortgage Guy. He goes under both monikers, and you can find him on Facebook, and I'm sure on all the social media channels. And we'll have
I'm everywhere.
links below to all of our contact information. So if you have further questions for myself as a real estate agent who is helping people through divorce, or for Ryan, who obviously has all the qualifications that's needed to help you with your next chapter and get to the end of this one equitably, you'll have that. Thanks for watching.